Hey guys, Zoe here from OneGlassTrader.com, and in this video I'll be sharing with you how I personally trade hidden divergence. And what I'll also be doing is sharing with you an example live video trade that I took to demonstrate where I enter, where I put my stop losses, where I take my take profit target, reward to risk, all that good stuff, all in this video. So let's get to it. So before I walk you guys through how I trade hidden divergence, I wanted to very quickly just remind everyone on how to spot hidden divergence. So hidden divergence happens when there is a disagreement between price and an oscillator. So for those of you who've been following my channel, you guys know by now that my favorite divergent indicator to a certain extent is the MACD oscillator. However, it works just as well with the stochastic, CCI, RSI, just to name a few. And for me, just the MACD, I just find it the easiest one to kind of read. So that's what I like to use. So there are two types of hidden divergences. The first one being bearish hidden divergence, and that's when price is making a lower high and the oscillator is making a higher high. When that happens, generally there's a high probability that price will continue to fall towards the downside. And the second one is hidden bullish divergence. So this is where price is making a higher low and the oscillator is making a lower low. And when this happens, there's a strong probability that price will continue in an upward momentum direction. So now that we understand what we're kind of looking for, how do we try to spot this on a chart? And the first thing that I like to do is find a trend. Now, hidden divergence, you trade that when it's trend continuation or trend momentum. So the first thing we need an established trend or a start of a trend in place, so then we can start looking for hidden divergence. So the question you're probably going to ask is, how on earth do I find a trend? And again, for those of you who've been watching my channel, the best way in my opinion to find the trend very quickly on a currency pair is using the OGT trend dashboard, which you can find the download link is absolutely free, as well as the tutorial video below this video, or in the top right corner, where I will show you how to install it, trade it, and apply it to easily be able to find a trend. So once we've found the trend, the next thing that we need to do is we need to try to spot hidden divergence. Now we're going to use this example over here on the USD JPY 5-minute chart. And what you can see is, again, using my oscillator choice, the MACD, that we can see an example of bearish divergence. So if I take my kind of trend drawing here, you can see from this point over here that price is making lower highs and that the MACD is making higher highs, and gives you a classic example of bearish hidden divergence. So again, there are two main reasons why I like to trade the MACD as my indicator of choice. The first one being is I can use it as an entry signal, and how I do that is I wait for the MACD to cross over towards the downside in this example, or cross over to the upside if it's a bullish hidden divergence. So we can see here that, so I'll just draw this line over here and move this across, that the crossover happens around this area over here. So on this bar, on the close of this bar here, I would go enter in short, and then hopefully that price will continue inside my direction. And as you can see in this example, it does quite nicely. So that's the first reason why I like to trade or use the MACD as my oscillator of choice. Not only visually is one of the best indicators I feel to go spot hidden divergence, it gives me an entry signal. The second reason why I like to do it is I like to trade divergence when the oscillator crosses above or below the zero line, depending on what I'm trading. So an example of this is, what I mean is for those of you who know the MACD, but very quickly, is if price is above the zero line, is considered to be in an uptrend, and or upward momentum is probably a better term, and if the oscillator is below the zero line, it's considered in a downtrend or downward momentum. So when price goes above, or the oscillator, sorry, goes above the zero line, as you can see over here, and we are inside a bearish divergence example, it gives a higher probability. Well, this is my opinion anyway. It gives a higher probability that price is going to go back towards the downside. I don't know why that is. It's just when I trade it and and I and this type of setup occurs, it doesn't always happen. I trade it when the peak was below the zero line and the first peak was a bit lower. I would still trade it based on other factors, but what I find is a higher probability is when, in a bearish example, where the second peak to form the hidden divergence happens above the zero line. So that's just an example there of how I would trade hidden divergence. What I'm going to do now is show you a live example that I've shot for illustration purposes only. It's on a demo account, and it will just walk you through step by step of my entry, my stop loss, my take profit target, of how I would trade hidden divergence. So I wanted to share with you a short trade that I've just taken on the pound yen 5-minute chart, which showed a classic bearish hidden divergence. So what we can see here is that the price is making lower highs, as you can see there. And what I'll do is just draw those lower highs there. And as I'm sure you guys have probably seen already, that there's a disagreement between the price and the MACD, because the MACD is making higher highs over here and over here. So that is a classic sign of bearish hidden divergence. So the expectation is that this pair is gonna continue to go short. And the reason why I like this is, again, you've got the hidden divergence there. You can clearly see as part of step one, we are in what we're classifying as a downtrend with the 50 at the bottom, 100 in the middle, and the 200 at the top. What I like to see is we're not that far away from where the actual trend change took place, which is good to see. And just in the last bar, we saw, you might not be able to see it here, but I can hover over here. That's the next one. As you can see, the value is minus 0.036, so just got in straight after the crossover came in. So I've been waiting for this trade. I really wanted to record this for you, so you guys can see a live trade in terms of how it actually goes. So what I've done is I've just gone for a standard 2-to-1. So the first thing I did after I took the trade was identify where I'm putting my stop loss, and for me, I wanted to obviously be above the recent highs, but I'm using the 50 EMA line as my second line of defense after the recent highs there. So that's where I decided to put my stop loss, and again I've gone for a risk to reward of 2-to-1, because that's kind of the standard what I kind of go for with these type of trades. So again, I just wanted to share that trade with you, and I will come back to you guys once we find out the conclusion of the trade, so stand by. So I just wanted to share with you the conclusion of this trade. So it's about 20 hours later on inside the day, and as you can see from the terminal below, that we closed out the trade in profit, and it hit our take profit target. So I've just zoomed out a little so you guys can see what's happened throughout the day, and as you can see, as expected and as predicted, the pound yen continued to sell off, and you can see here in the kind of shady blue area is where we placed the short trade. And again, the reason why we placed the short trade is because we saw hidden bearish divergence. The price was making lower highs and the MACD was making higher highs. So we took it, we took the short, and we're already 133.51. It's about 5.1. Oh, it's about here somewhere. So 21, 22 bars. So it's about what? Couple of hours for us to hit our take profit. And what's the low it went to? Went all the way down to nearly 200 and 270, 280 pips. So you can see the power there. And what I've just noticed is I've just seen very clearly another opportunity for bearish hidden divergence. Don't know if you guys have spotted it yet, but you can see that the price is making lower highs and the MACD is making higher highs. And again, we would have waited for the crossover here. So we can see that the crossover was around this point over here. So we would have got in over here, probably put the stop in just above the 50 EMA. And what's that? It's about, let's call it 50 pips. And comfortably making 100 pips there. Again, another high probability trade, going with the the long-term trend on the particular price chart that we're looking at here. And again, I'm not using any higher time frame analysis, none of that stuff. I'm just looking at the current chart that I'm trading. As you can, hopefully you guys are seeing that how powerful hidden divergence actually is. So really hope that you enjoyed this live example, and I'm sure there'll be more to come, and I shall see you guys on the next video.